Good morning. Scott Lowe with A to Z Insurance, your trusted choice, independent agent. Last time we talked about unintended consequences of the Biggert Waters Flood Reform Act of 2012. Today we want to talk about hopefully some relief from that act, relief for the unintended consequences. On March 21st, 2014, the President signed into law the Homeowners Flood Insurance Affordability Act of 2014. And notice this new law does not repeal completely Biggert Waters, it just makes some changes to it. The first thing I want to emphasize is that there is much still we don't understand about this law and how it will impact your flood insurance rates if you have flood insurance or are considering buying a property that may have a flood insurance, or you're trying to decide if you want to continue to pay for flood insurance. And so we want to be careful not to promise something we can't deliver on, because FEMA actually takes several months to go through, interpret the law, and see how these things actually will impact your flood rates. And so please understand and be patient, because just as with the Biggert Waters, it took them 9 months to a year, we expect it to take several months, again, for all the information to trickle down. And so we defer to FEMA for guidance on how this will impact your flood insurance rates. The primary goal of the law, of this new law, was to lessen the impact of the unintended consequences of the Biggert Waters Act. It was to restore some of the subsidies in some of the situations where people who had built their property in good faith before FEMA ever came into their community, and so they did nothing wrong, but suddenly they're being required to arbitrarily pay thousands of more dollars for their flood insurance. It appears that that aspect of the law will be softened up. Again, we don't know all the details of it, but it sounds like there's some good news that the subsidies that were there for people that own property, they were already living in a pre-firm property, that is a property built before FEMA came into their community and forced compliance with local building code and flooding issues. These older properties, many built in the 20s, 30s, 40s, 50s, and 60s and 70s. Pinellas County came into compliance in 71, Hillsborough County 1979. So we're talking about properties built before those years are pre-firm properties. It looks like those subsidies will be restored. So if you're trying to sell your property, or you're just paying for flood insurance, whatever rate you used to pay, it should be fairly close to that, perhaps with some rate increases applied. The other situation that it appears so far will be benefited is if a lender no longer requires coverage. In other words, let's say you pay off your mortgage, and so the lender doesn't require it because the lender is no longer in the picture, but you still live in an A zone or a V zone, a high-risk flood zone property. You still live on the coast, on a lake, near a river, near a retention pond, an area that is at higher risk of flooding, and you still want to get a flood policy, you can go out and now get that policy with the subsidized rates that you had in the past. We'll keep you posted as more comes out. Thank you.